This is Horizons Middle East and Africa. Our top stories this morning. Asian equities rebound, shrugging off a global sell-off sparked by another Bitcoin downturn in yesterday's session. Ukrainian President Volodymyr Zelenskiy says the new peace plan draft looks better as Russian President Vladimir Putin plans to meet with US envoy Steve Witkoff today. The Taiwanese foreign minister says the China-Japan dispute could drag on for a year. We'll have more from our exclusive interview a little bit later in the show. It's just gone 9 a.m. Tuesday morning across the Emirates. It's 4 p.m. Tuesday afternoon here in Sydney. I'm Paul Allen in for Jemana Besetche. Let's take a look at how markets are tracking, particularly futures heading into the next session. Things look a little bit calmer than they did this time yesterday. Futures slightly weaker after a weaker session for the US, but we have seen markets in the Asia Pacific a little bit calmer today. Take a look at the yield on the 10-year, pretty much unchanged. We did have a 10-year auction of JGBs today, which was encouraging. Strong demand there. The bid cover ratio better than the 12-month average. So those higher yields attracting investors despite a likely rate hike this month. So if we take a look at this chart as well, we have seen a little bit of volatility for the bond market recently. Yesterday we saw the largest single-day move for 2s10s since late August, but things seem to have settled down at the moment. The Fed now in a quiet period ahead of its rate decision, and rising expectations as well that the BOJ is going to lift rates this month, and if not this month, near certainty that it's going to happen in January. Let's zoom in now on how markets in Asia are faring. Min Min Lo is in our Hong Kong studio. Min Min.
Yes, speaking of Japan, we are watching that market very closely because the BOJ, the finance ministry, had sold 10-year bond auction today, coming in amid this G10 bond sell-off, right? But interestingly, demand was pretty good, better than the 12-month average when it comes to the bid-to-cover ratio. We can see yields pointing down, the 2-year yield still hanging on to above 1%, and that pickup in yields after what the BOJ Governor Ueda said yesterday, that perhaps could have helped to lift the bond demand. Today, we are still seeing the yen weakening, but still holding on to above that 155 level. We are also watching very closely what's happening in Korea because that market is leading gains in Asia today. We have Samsung, for example, up by about a couple of percent today. That is because it has launched that trifold phone for the first time months ahead of competitor Apple, and that is helping to lift the Kospi here. The won is strengthening a little bit. We did get the CPI data out today, coming in 2.4% unchanged, which was still higher than the target rate of 2%, and that puts more of an argument for the BOK to put a hold on any rate cuts, and that's why we're seeing the won strengthening a little bit here. Paul.
All right, Min Min Lo in Hong Kong, thank you. Well, for more insights now, we're joined by Lale Akoner, a global market strategist at Etoro. Lale, thanks so much for joining us today. We are seeing some relative calm returning to markets in the Asia Pacific today, but I'm just wondering, how is your risk appetite at the moment?
Sure, I think, look, I mean, from a macro standpoint, we are going through a soft patch in the US. Obviously, unemployment is ticking up. That said, obviously, a massive fiscal stimulus is in the pipeline. We're thinking 150 billion for consumers are going to come in the form of tax refunds in February, 135 billion of tax incentives for businesses in general, which will have a boost small to mid-cap stocks. And finally, 100 billion already distributed to businesses in September, all coming from the tax bill. So overall, Paul, this does tell us that, you know, the policy is quite easy. We do expect the Fed to continue its rate cutting as well. And therefore, you know, a little bit of volatility might still be in the cards for the end of the year. But next year, the sentiment will improve, in our opinion.
And we're also going to get some delayed inflation data this Friday, but if, as you described, we might see some cashed up consumers in the new year, what are the implications for inflation going forward and by extension, Fed policy in the first quarter?
Sure. Look, I think, again, the Fed is going to take a look at whether there is any tariff impact on the consumer prices, whether any pass-through by businesses to consumers. we still think that they will decide that actually the balance of risks is more inclined towards higher unemployment, and therefore they will continue their rate cutting cycle. And again, consumers are, in terms of sentiment, we are seeing sentiment coming down. It hasn't yet impacted, at least the data doesn't show that spending is coming under pressure. That might still happen because, as I said, Q4 is turning out to be a soft patch. Overall, we do believe that the environment is such that it is disinflationary at the moment, and therefore the Fed is going to continue cutting rates.
Now, I know you also have some enthusiasm for small and mid-cap stocks as well. Can you unpack that a little bit more for us?
Sure. We really like small and mid-cap stocks here, especially the high-quality ones. So you can think of them as S&P 600, not Russell 2000. They're benefiting from rate cuts, especially as we move further into the rate cutting cycle. And as I just pointed out, the fiscal bill as well, especially those sectors which are very R&D intensive, which will be able to, again, get some benefit from the tax incentives coming from the One Big Beautiful Bill. That could be in home builders, it could be retailers, it could be restaurants overall, but again, also R&D intensive sectors as well. So overall, as liquidity increases into 2026 with fiscal policy, but also with monetary policy, we just believe that small and mid-cap stocks will benefit from here.
And how about towards the other end of the market? And I'm thinking particularly some of the big AI-linked names. How are you exercising discretion around some of this, considering the near constant talk of a bubble?
Sure. Look, I think from here, excluding Nvidia, the change in the free cash flow of Max 7 names is actually negative. So we are moving towards an environment where there will be more discernment coming from investors in terms of understanding how these Max 7 names are financing their capex. Are they going to the public market? Are they going to the private market? Or some of them are still drawing down their cash flows. I think this will become more important. And as I said, the AI bubble talk will continue until these firms can obviously show us returns in terms of their capex as well. So a bit of volatility, but more discernment into the next year.
And heading into the next year, what are some of the key risks that you're keeping an eye on?
I think if inflationary, it's not our base case scenario, but if inflation proves to be persistent, then obviously Fed not being able to cut as much as the market is pricing now is going to be, it's going to be surprising for the market, and therefore will lead to some volatility. Or on the other side, if there is a major recession such that the Fed is behind the curve again, then that's another one that just needs some thinking about some defensive exposures in, say, staples in other parts of the market as well, if it materializes.
All right, Lale Akoner, Etoro Global Market Strategist, thanks so much for joining us today. Well, still to come, President Zelenskyy says the latest version of the Ukraine peace plan does look better, but difficult issues still need to be resolved. First, though, Taiwan's foreign minister warns the current dispute between China and Japan over the island could drag on for a year. We'll have more from our exclusive interview next. This is Bloomberg. Welcome back to Horizons Middle East and Africa. I'm Paul Allen in Sydney. And Taiwan's foreign minister says the current dispute between China and Japan over the island could drag on for a year. Speaking exclusively to Bloomberg, Lin Chia-lung called for de-escalation, saying the tensions offer little benefit to any party.
So we have very good communication channels with the Japanese government. So we are trying to manage the situation to avoid it's become a situation out of control. So because...
So are you saying you're downplaying it? Because
yes.
the response so far from Lai Ching-te, the president, has
yes.
been fairly muted.
Yes. So we show our support through, I think, a soft approach, suggesting that our people to travel to Japan, also to eat Japanese food. So we want to help cool down the situation, because once the Chinese nationalist sentiments stimulated, it will very, to some extent, out of control. So I think for Beijing, it also not in its interest to escalate the conflict.
What are you communicating to Tokyo? Do you want them to back down to cool tensions or stand ground?
I think it's in everyone's interest to stabilize the current situation, because once Xi Jinping mobilize its society through nationalist sentiment, it's also not in Xi's interest, because the economic downturn and also the high the rising unemployment rate, and also the trade conflict with the United States. So I think it's not in everyone's interest to have the China-Japan disputes and the issues related to Taiwan to escalate.
So by not provoking Beijing, you feel, this is the way I'm reading it, you feel that this could die down sooner?
Yes, I think so.
How long?
Because I think Japan has already shown its willingness, because it's in the parliament, it's in the QA session. Yeah. So that has some backgrounds. Yeah, so it's not just a different policy change from the Japanese side, but for Beijing side, maybe it take I think maybe a year to stabilize the situation. But for saving Xi Jinping's face, he has to do something to show his domination in the disputes.
That was Taiwanese Foreign Minister Lin Chia-lung speaking to Bloomberg's Stephen Angle. The Ukrainian President Volodymyr Zelenskiy says a new version of the peace plan does look better, but he warns the territorial issue remains the most difficult in talks. Mr. Zelensky spoke after meeting with French President Emmanuel Macron in Paris.
And on the topic of security guarantees, we have concrete details from the U.S., concrete details from Europe. I'd say these are the three main topics, tracks, but also triggers. We need to be very careful here. I thank our negotiation teams. The plan looks better.
Well, let's get to Bloomberg's Tony Halpin, who leads our Russia coverage in Dubai. So, Tony, is it fair to say new and realistic peace proposals are now emerging?
Hello, Paul. Yes, well, as Zelensky said there, the plan looks better than the original 28-point version that came out and was considered to be too favourable to Russia's position. Ukrainian and US negotiators have been hammering out details. Ukrainian chief negotiator said that the situation was delicate and there were still complex issues to be resolved. And key among them is the one that President Zelensky highlighted, the question about Russia occupying Ukrainian territories and what status those territories will have, and what Ukraine wants, which is a binding security guarantee that will protect it against potential future Russian aggression. So those issues are all still to be hammered out, I think, and the talks are finally poised.
So we've also got Russian President Vladimir Putin planning to meet with US Special Envoy Steve Witkoff. That's supposed to happen on Tuesday. Is that meeting going to consider these latest proposals?
Yes, this is Mr. Witkoff's sixth meeting with President Putin this year. He hasn't actually been to Ukraine, so he's perceived in some quarters as very much delivering the Russian point of view to the US and the US point of view to Russia. So he will be trying to lay out the details of the proposals that have been agreed so far by Ukrainian and US negotiators and try to get Putin's response to those and whether it will form the basis for some kind of agreement that may lead to a ceasefire. And it's notable, of course, that Europe is watching all this from the sidelines and doesn't really have a role in influencing the outcome.
So what then is going to happen in this deal, or are there any provisions in this deal to prevent Russia from trying this again a few years down the track? Because we've seen a degree of salami slicing when it comes to Ukrainian territory.
Yes, I mean, this is the great Ukrainian concern and the great European concern as well, because they fear that they may be left by the US under President Trump to take up Ukraine's defense if there was a fresh Russian aggression. The issue for Ukraine, of course, is precisely that they say that Russia has previously broken agreements to observe Ukraine's sovereignty, and that they have no assurance that Putin won't do the same again if a new ceasefire is reached now. President Putin has said very clearly that he wants 4 Ukrainian regions. He doesn't fully control those regions. If an agreement comes out that doesn't hand him those regions, Ukraine's concern is to make sure that he's not going to come back at some point in the future and try to retake them and perhaps go further forward as well. So that's a central issue for President Zelensky. So far, we don't really see the details of what potential security arrangements may be included in any ceasefire plan.
All right, Bloomberg's Russia team leader Tony Halpin there. Let's take a look at now some other stories that we're following. The White House has defended the Pentagon's handling of a September attack on a suspected drug-running boat off South America. It's denying a report that Defense Secretary Pete Hegseth had given an order to kill everyone on the vessel. Spokeswoman Caroline Leavitt confirmed 2 strikes on the ship, but says the order for the second attack came from a US Navy admiral and not Hegseth.
President Trump and Secretary Hegseth have made it clear that presidentially designated narco-terrorist groups are subject to lethal targeting in accordance with the laws of war.
Costco has joined the growing list of businesses suing the Trump administration for tariff refunds. The company filed a complaint in the U.S. of international trade to ensure eligibility for funds should the U.S. Supreme Court strike down the president's signature global tariffs policy. The warehouse club chain becomes one of the biggest corporate players to jump into a fight, largely driven by small businesses and democratic state officials. Still to come, South African police make more arrests as they investigate the alleged illegal recruitment of men to fight for Russia in Ukraine. We'll have more on that next. This is Bloomberg. Welcome back to Horizons Middle East and Africa. I'm Paul Allen. South African police have arrested 5 suspects for allegedly trying to illegally travel to Russia for military work. The arrests come after a group of young men were reportedly tricked into fighting for Russia against Ukraine after being approached by former President Jacob Zuma's daughter. Bloomberg reporter Anthony Squarzine joins us now from Johannesburg. So, Anthony, can you explain what happened with regard to these latest arrests?
Paul, yes. Over the weekend, the Hawks, which is an elite police unit, reported that they had arrested initially 4 people at the main airport in the country, which is OR Tambo, just outside Johannesburg, on suspicion they were traveling to Russia to fight for that country against Ukraine. And a day later, they announced they had arrested another. One of those people is a woman who is accused of facilitating their recruitment, and she's also quite a well-known presenter on state radio.
So have any other prominent figures been implicated in this?
Not in this particular case. So far it's separate, but only last week, Durizile Zuma Sambudla, who is the daughter of former South African President Jacob Zuma, was tied by our own reporting and reporting by a local press to about 20 Southern Africans from South Africa and Botswana who have ended up in Russia fighting against Ukraine. Now, they say they were told that they would be undergoing bodyguard training for her father's party, MK, and would come back and work in South Africa. But instead, they say they were tricked into signing contracts with the Russian military, all in Russian. They didn't understand them. They're now trapped on the front line, and their family members have, in some cases, not heard from her since August. Now, she resigned from Parliament just a few days ago, and is also being investigated by the police after her own sister filed charges against her.
All right, Bloomberg's Anthony Squazine, thank you so much for that. Let's take a look at some other stories that we're following. Nigeria's economy grew at a slightly faster pace than expected in the third quarter. GDP expanding an annual 3.98% in the 3 months through to September. The better-than-expected outcome will be welcomed by Nigeria's President Bola Tinubu. He's been facing mounting criticism amid a wave of abductions that forced him to declare a security emergency. The UK government has withdrawn financing of about $1 billion for the construction of Total's LNG facility in Mozambique due to security fears. The LNG project was put on hold by Total in 2021 after attacks by Islamic State-linked militants near the construction site. The French major has taken steps in the past year towards restarting the development, including seeking the reapproval of key financing. Russian President Vladimir Putin has signed an order allowing visa-free entry for most Chinese citizens. They're now able to visit Russia for 30 days for business and tourism purposes. Some categories, including journalists and students, still need visas. Russia is also about to kick off its first sale of yuan-denominated sovereign bonds as ties between the two countries deepen. A survey shows that Chinese export controls are forcing European companies to rethink how they operate. The poll, released by the European Union Chamber of Commerce, indicates that about a third of European firms plan to shift sourcing away from Beijing. One respondent also said that China's curbs will result in additional costs equivalent to about 20% of its gross global revenue this year. Let's take a quick look at our markets are tracking at the moment. We haven't mentioned the oil price today. That's holding pretty steady at the moment. We've got Euro Stoxx futures, meanwhile, pointing in a positive direction by 0.1%. S&P E-minis and Nasdaq futures, meanwhile, pretty flat, but that's after we saw a modestly down day on US markets. Still to come, we're going to discuss the recent crypto rout, which has wiped out almost $1 billion of leveraged bets. That conversation next. This is Bloomberg. This is Horizons Middle East and Africa. Our top stories this morning. Asian equities rebound, shrugging off a global sell-off sparked by another Bitcoin downturn in yesterday's session. Ukrainian President Volodymyr Zelenskiy says the new peace plan draft looks better as Russian President Vladimir Putin plans to meet with US envoy Steve Witkoff today. Also, the Turkish economy slowing more than expected in the third quarter, and that's fueling bets for more rate cuts. We'll be live in Istanbul shortly for the details. Well, it's just gone 9:30 a.m. Tuesday morning across the Emirates. It's 4:30 Tuesday afternoon here in Sydney. I'm Paul Allen, standing in for Jemana Besetche. Let's take a look at how US futures are tracking, a little bit calmer than what we saw yesterday. Pretty flat at the moment for S&P E-minis and Nasdaq futures as well. A lot of what we saw was inspired, or some of what we saw was inspired by the steep decline in Bitcoin prices. I'll get to that in just a moment. The US 10-year pretty much unchanged. Had a very encouraging 10-year auction for Japanese bonds today. Better demand than expected. The bid-to-cover ratio was better than the 12-month average as well. There's another key test there coming up with a 30-year auction on December the 4th. But calm has been restored to the bond market for now. A couple of key rate decisions, of course, coming up. The Fed now in a quiet period ahead of its decision next week. And the Bank of Japan widely expected to raise rates later this month. Take a look at the oil price that is holding its gains. Geopolitical tensions are keeping the market on edge. There is, of course, uncertainty about what's going on with the US and Venezuela, although there are encouraging signs in terms of Russia and Ukraine edging towards peace. Recent attacks on Russian Black Sea oil infrastructure has been continuing. Now, I did mention Bitcoin. Here's a fun chart for you. Digital gold versus real gold. Well, that is now at its cheapest level since January 2024. You can buy a Bitcoin now for a little bit more than 20 ounces, and we haven't seen that for quite some time. Well, let's zoom in on how markets in Asia are faring now. Min Lo is joining us from Hong Kong. Min, what are you watching?
Yes, Paul, we are seeing a very modest recovery here in Asia after the meltdown in the crypto space, right? Things are starting to stabilize a little bit, but you can see already the Hang Seng is erasing earlier gains, now in the red. But the Kospi is leading gains in Asia today. We were watching the CPI numbers coming in unchanged at 2.4%, which is hotter than the target rate of 2%. So that is dimming the chance of a rate cut from the BOK. We were watching the bond sale in Japan as well, seeing pretty solid demand, again, helping to restore some calm, especially in the bond market. We saw the bond yields just ticking slightly lower today in the Japanese markets. But flip the board, what else we're watching here in Asia is the Indian currency, the rupee, falling to record lows today. You can see we are now, we've had a bit of the losses. We are now at 89.90 handle there. The Royal Bank of India was prompted to intervene sporadically, selling US dollars to prop up the rupee. That is over concerns of uncertainties when it comes to the trade deal that India is looking to negotiate with the US, and that is overshadowing the strong GDP numbers that we got. In fact, the strongest in 6 quarters, but not enough to prop up the Indian rupee here.
All right, Min Lo in Hong Kong. Thank you. Well, let's get back to the Bitcoin story. We have seen that sell-off rolling on since early October, although it has recovered a little bit. We're back up at 86,898. We did briefly touch below 84,000 in the US session, but this is, of course, a famously volatile asset. Now, all this happens after almost $1 billion of leveraged crypto positions were liquidated during another sharp drop in prices yesterday. So for more on this, we're joined by a crypto reporter, Suvashri Ghosh in Singapore. So, Suvashri, what's the sentiment in the market now?
Hi, the sentiment is quite bearish, even after seeing a slight bounce back from the sharp sell-off that we saw in the last 24 hours. The bounce back has not been very convincing. We have not seen big buyers yet in the market. The so-called dip buys or the value buying has not kicked in yet. There is a index called Fear and Greed Index in crypto, which is at 23, which still shows extreme fear, reflecting the kind of mood that market is at. Traders are still sitting on the sidelines. As you mentioned, Paul, the levered bets have been unwound, and their traders are sitting on liquid positions, cash positions, really waiting for some triggers. But as of now, the sentiment looks kind of bearish to cautious in the market.
So is the sell-off this time different from previous times, or is it we've seen this movie before?
The sell-off, the reasons for the sell-off and the way it is panning out is quite different this time around. And it's an interesting question. You know, the way crypto has been shown to be institutionalized in this recent few months is that there are vehicles that have been spun off from crypto, like the digital asset treasuries. And what is happening is the risk is transmitting from the crypto world to the broader markets through these kind of vehicles. That is a key difference. The digital asset treasuries, which have been formed to raise funds on the back of the cryptocurrencies, basically they're buying cryptocurrencies by raising those funds. And those underlying assets, the cryptocurrencies have seen a sharp sell-off, and therefore these digital asset treasury companies are also in the water. Most of them are. So the way this risk is spanning off is basically transmitting to a wider system. We have seen also that the single stock ETF, especially linked to strategy, how it's become the worst performer among all cryptos. And then we have the inflows into Bitcoin ETFs, also being very slow and sluggish. All this together paint a picture of how this time the sell-off is slightly different from before, where the risks are transmitting to a broader system than just staying within crypto, Paul.
We've also got the Fed proposing some new rules for banks and stable coins as well. What's being discussed here?
So as of now, the rules have not come into effect. That's a big, that could be potentially a big game changer for crypto. But maybe next year, people are waiting for, the March when all the crypto-related, most of the crypto-related acts can be will be implemented next year in the U.S. And as we know, President Donald Trump has been a big advocate of crypto. And if that happens, which is expected by March next year, that could be a optimistic situation for crypto markets. But we are nothing as of now really changes the needle a lot. Even the Fed rate cut is expected and priced into crypto. So now you see how the bearish the sentiment is. But yes, if those legislations come through early next year, things can move for crypto.
All right, thank you, Suvashri Ghosh, there, our crypto reporter in Singapore. Let's take a look now at some of the other stories that we're following. Shares of chip design software maker Synopsys jumped, with Nvidia investing $2 billion in the company as part of a broader engineering and design tie-up. The new partnership involves integrating Nvidia's tools into Synopsys' chip design applications. CEO Jensen Huang says the move will help infuse Nvidia's AI computing technology into more industries.
This is one of the largest compute-intensive industries in the world, has not been serviced, not been addressed by accelerated computing until now. And we're accelerating that process with our deep partnership. Together, we will address nearly every industry.
OpenAI is taking an ownership stake in Thrive Holdings, an investment vehicle set up by top investor Thrive Capital. The deal adds to a growing list of circular transactions involving the ChatGPT maker and its backers, raising concerns the AI boom is being artificially propped up. OpenAI says the stake is in return for giving Thrive access to its teams as both companies focus on enterprise AI adoption. Bloomberg has learned Warner Brothers Discovery has received a mostly cash offer from Netflix as it fields a second round of bids. Sources say the offers are binding, which means the board can sign off on a deal quickly if its goals are met. Warner Brothers, the parent company of HBO, CNN, and its namesake film studio, officially put itself up for sale in October after receiving multiple unsolicited offers for all or part of the company. Airbus will inspect hundreds of its best-selling A320 jets for potential quality flaws in the aircraft's body, risking the company's last-ditch effort to meet its delivery target. According to materials from a presentation seen by Bloomberg, a total of 628 jets contain panels that may be either too thick or too thin due to a manufacturing issue at a supplier. Of these, 168 planes are already in service with carriers, and the rest are at various stages of production. Coming up, Turkey's economy slows more than expected, giving the nation's central bank an opportunity to continue its rate cuts. We'll discuss the details of that next. This is Bloomberg. Welcome back to Horizons Middle East and Africa. I'm Paul Allen. Turkey's economy slowed more than expected in the third quarter, providing fuel for the central bank to continue lowering interest rates. The economy grew 1.1% in the 3 months through to September. Beryl Akman is Bloomberg's Turkey Deputy Bureau Chief, and she joins us now from Istanbul. So, Beryl, what do we make of those third quarter GDP numbers?
I think, Paul, there's a bit of a muddy picture in growth figures published yesterday. Now, in the headline number, the annual growth for third quarter came in at 3.7%, and that was lower than the second quarter numbers, as well as below the Bloomberg survey expectations of 4.2%. So in the headline, we see quite a significant growth. But just like you mentioned, on a quarterly basis, the expansion was 1.1%, much stronger than what analysts were expecting, which was 0.5%. But still, we expect, and economists expect really policymakers to focus on the headline numbers and see scope for further rate cuts. We've seen a bit of a split among sectors. Construction remains quite robust, as well as domestic demand, which has been quite a challenge for policymakers to slow down. But on the other hand, we've seen some sectors like agriculture take quite a sharp contraction, slow down in activity. So a bit of a muddy picture, but the overall message is for policymakers to focus on the headline numbers, which is a sharp slowdown.
So how's this going to impact the central bank's rate decision next week? Because as you were talking there, we had a chart of inflation up, still pretty hot, above 30%.
I think so. Now, I think policymakers and for markets, they're just not focusing on GDP numbers, which, just like we mentioned, there seems to be some scope for rate cuts, but also for inflation, November inflation, which will be published tomorrow. Now, Central Bank Governor Fatih Karahan said last week that he expects a marked improvement in prices last month after some pessimistic data the prior months. But still, economists are focusing on also domestic demand, which they say hasn't really slowed down as much as intended. And any dampening growth we see might be temporary if the central bank continues with its rate cuts. Annual inflation at the end of this year is expected to come in above 30%, and that's way above the central bank's target for this year, which was 24%. But policymakers seem intent to continue cutting rates.
All right, that is Bloomberg's Beryl Ackman joining us from Istanbul. Thank you. Now for a look at some of the other stories that we're following. A leading Iranian rights activist and Nobel laureate has told Bloomberg that state suppression in the Islamic Republic is getting worse as the country faces multiple crises, including regional isolation and a deteriorating economy. Nagez Mohammadi says activists, teachers and academics are increasingly being targeted by the state, which is using the death penalty as a, quote, tool of oppression.
The repression has intensified. The fact is, the executions reflect the degree of violence and cruelty the Islamic Republic has unleashed against the Iranian people. Arrests have become far more widespread and have now reached layers of society that, although always under threat, hadn't been directly targeted like this before. I see the repression now as extremely serious. The establishment's violence against its own people is a naked one. And I know people are deeply angry.
President Trump is encouraging Israel to maintain dialogue with Syria after a deadly military operation on the border further strained relations between the two nations. Trump on Truth Social also said Syria's new president is working to ensure the two countries have what he called a long and prosperous relationship together. While he didn't explicitly criticize Israel's action, the comments marked a rare instance of Trump urging Israeli caution in the region. The U.S. State Department has approved a possible $500 million defense support deal for Saudi Arabia, according to the U.S. Defense Security Cooperation Agency. Saudi Arabia is looking to purchase spare parts for some of its military aircraft, including Black Hawk and Apache helicopters. Still to come, why China's top-down AI strategy could come at a big cost to private sector tech firms. This is Bloomberg. Welcome back to Horizons Middle East and Africa. I'm Paul Allen. China's top-down AI strategy sets the country up to achieve large-scale deployment that the US will struggle to replicate. The national rollout leverages low-cost open-source models and gives China a greater chance of improving economic productivity. However, this model does come at a cost to private sector tech firms, and that's the focus of a report by Bloomberg intelligence analyst Robert Lee, who joins us now to talk us through it. So, Robert, tell us more about China's AI rollout strategy.
Okay, well, this is defined by the government's top-level AI Plus strategy, which is looking to pursue this sort of rapid deployment of AI across every sector, across every region of its economy, not just within its vast industrial base, everything from education to local services, local government, you name it. So I think in contrast to the US, China is far more focused on the near-term deployment, the real-world deployment of AI, rather than pursuing AI and technological progress for its own sake. So it's a much more pragmatic strategy that I think, given that they are doing this on a relative budget versus the vast amounts of capex that are being invested in the US at the moment, they have a higher chance of generating a return on their investment, we argue in this report, versus their peers in the US.
So how successful is this approach likely to be for China?
Well, I think the ultimate winners of this stand to be the Chinese economy as a whole, economic productivity, because whilst we question the real value add that AI can offer, is it really truly intelligent? Can AGI be achieved? Putting that argument to one side, I think the evidence is there that AI is a good productivity tool. It can generate cost and efficiency savings in various applications. So by pursuing the rapid deployment of AI across every sector of the economy, as I've mentioned, it's economic productivity that stands to benefit. But at what cost, and who's really funding this or subsidizing this? And again, in our report, we pull out some evidence and make a very strong argument that the private sector companies, including the listed large tech platforms, are really subsidizing this national rollout. I'll give you a couple of numbers very quickly just to highlight this point. If you look at Alibaba's cloud margins, they're in the high single digits. You compare and contrast with Amazon Web Services, they're in the high 30% range. That gives you one example of the degree to which China's tech platforms are subsidizing this. And then if you look at something else, API pricing, it's more than 90% lower than similar API pricing. This is the external cost of services to deploy AI in your apps. It's more than 90% discount to its Western competitors. So there's a huge level of subsidization, largely being funded by the private sector companies in pursuit and in support of the national aim. So it's the economy that will win, subsidized by the private companies.
Yeah, so a win for the economy, the private sector perhaps not so much. Why is it coming at a cost to the private sector?
Well, again, it's, obviously it's the way in which China works and the way in which its economy is organized. It's run from a very top-down strategic state level. So, again, I think China is very keen at the national governmental level to democratize AI, to make it available to all on a fair and equal basis, which is why you see a high prevalence of open source models, which the vast majority of which are actually free to access. So ultimately, though, somebody has to bear the cost burden of that. And as I said, the state is doing some of that, but it's the private sector companies, the shareholders of the private sector companies, which are subsidizing that to a substantial degree.
So China and the US taking very different approaches here. Where does this leave China in the global AI race?
Okay, if you look at the levels of capex being invested, again, based on our numbers, China is spending approximately, or if you look at the 5 large tech platforms, around 10% of what their US peers are investing. So they're really doing it on a budget. And as I said, by focused on near-term gains within their broader economy, I think they're both doing it at a lower cost and therefore stand a higher chance of generating a return on investment. I think the overall risk which they're taking on, both financial risk and otherwise, is also substantially lower. And also, clearly it looks like the door is closed to Nvidia and other US chip suppliers within China at the moment, as China increasingly turns to domestic suppliers like Huawei. So as the demand for domestic chips rises, again, I think that will seed the domestic semiconductor industry, and that's another benefit of China's more nationally focused strategy.
All right. Thank you, Robert Lee there from Bloomberg Intelligence. Now let's take a look at some of the other stories that we're following. Goldman Sachs has agreed to a $2 billion deal to buy Innovator Capital Management, which specializes in so-called defined outcome ETFs. Innovator, with more than $28 billion in assets under supervision, sells ETFs that seek to limit downside while capping upside potential amid growing volatility. Goldman's own forays into defined outcome ETFs have so far met with a lukewarm reception. Top market-making firms Jane Street and Citadel Securities are on track for record trading revenue gains as they challenge Wall Street's dominance. Jane Street's third quarter turnover jumped 18%, putting it behind only top players JP Morgan and Goldman Sachs. Citadel's sales, meanwhile, rose at 9%. Both have benefited from market volatility, often fueled by President Trump's shifting policies. Before we leave you, let's take a quick look at how some of these key assets are tracking. Not a lot of change for S&P E-minis or NASDAQ futures, still looking at just a few points softer. Dow Jones futures also a little bit weaker as well, although we are looking ahead to a modestly bright open in Europe. But that is it for Horizons Middle East and Africa. I'm Paul Allen in Sydney. Stay with us for Daybreak Europe. This is Bloomberg.